Investors keeping a close eye on streaming ad sales and subscriber growth for clues on whether Disney can hit its targets for Disney Plus profitability by the end of the year. Joining me here, Post 9, to discuss, Jim Stewart of the New York Times. He's also a CNBC contributor and wrote the book, Disney Wars, we were just talking about. All roads Disney lead back to you.
Thank you.
All right, so where does the road for Disney go post-Peltz fight?
Well, one point I would make is Peltz is still hovering out there.
Yeah.
I mean, this proxy fight is over, but he's still in the stock, and he says that he's closely monitoring the situation, which, by the way, I think is good for Disney shareholders. It keeps the pressure on a little bit, particularly to deliver the cost cuts that Disney has said it's going to deliver. But that aside, I think first we've got to start with streaming. I think that's where the main interest is going to be here, and whether they're on target to turn a profit by the end of the year. And, you know, my sense is they should be able to make money at this. I mean, they've got, if you count Hulu, they're up to 200 million subscribers. And we see it, Netflix has, 270 or something, which is better. But Netflix has healthy 18 to 20% margins. So why doesn't Disney? They've either got to lower costs or boost revenue. And on the cost side, one thing I'll certainly be looking for is they still are benefiting from the strikes and the fact that they were forced to stop spending. And everybody in Hollywood is telling me they've been very slow to start again. All the legacy.
Everybody.
Pretty much everybody.
Okay.
Not so much
Not
Netflix.
just a Disney problem.
Not just a Disney issue.
Okay.
But I think in the strikes, they discovered maybe we don't have to spend that many billions on new content. And if they could actually slim that down and then also cut some other costs, you're going to see some significant improvement, I think, on the cost side.
What about the content issue itself, whether they have good enough content going forward beyond the legacy content, if you will, to do what you suggest needs to happen?
That's a huge issue. I mean, there are two issues here, the quality of the content and the quantity of the content. And, Iger has been saying, and his fellow chief executives have also been saying something I've heard for decades, which is, we're going to improve the content. We're only going to make hits. And
well, if only everybody would love to believe that was going to be true.
It's like I'm only going to write bestsellers. I mean, it's like nobody has the magic formula for that. I mean, and Disney had a good thing going there in the movie business for a while with the Marvel stuff, the franchises. But suddenly, superheroes have been faltering.
Why is that? Why do you think that is?
Well, these things do go on sometimes decades-long cycles, but I'm old enough to remember when the Western was the king of entertainment, and that has never really come back. Is there superhero fatigue? Maybe. These things are very long and cyclical, but maybe that has kind of played itself out. They're going to have to find some new franchises there. So that's going to be challenging. The same thing with quantity. Netflix is still spending. And the key to the Netflix success has always been when one good thing ends, they've got more for you to look at. And I think the others have been struggling to keep that pipeline full, especially first COVID and now the strikes.
I had a shareholder of Disney on my earlier program today who, to the issue of succession, said, I don't even care about that. I care about these other issues more. How should investors, we, think about the issue of succession at Disney since it went so terribly wrong last time?
I think that's why you do need to be concerned about that. I mean, I myself, over the years, have been someone in the school that, well, it maybe doesn't matter so much who the chief executive is, especially if they've got a good, the trends are going in their direction or whatever. But suddenly you get a company like this and an industry going through, radical transformation. I think who the CEO is hugely matters, and I think investors should be following this very closely.
I mean, I think his point was like, Iger is the CEO now and is going to be for a while here. I'll worry about that again when I have to worry about that. But these more structural issues, perhaps, are more relevant right now to the shareholder base.
Well, that's probably true. I mean, look, Iger's at the helm now, and he's going to be there for a while, so we don't have to worry about some, radical upheaval in the C-suite. And these structural issues, by the way, are huge. I mean, this is like one of the biggest business transformations I've witnessed in my now long career. And it's very unclear how this is all going to shake out. Look, we've got the drama at Paramount going on. Clearly, the status quo, with the industry collectively losing billions of dollars a quarter, is not sustainable. So there has to be some major transitions. But I do think Disney should be one of the producers able to reach scale here, and it is a scale business. And they should be, in my view, they should be able to make money.